Let's get some perspective on this. Brent Johnson, CEO at Santiago Capital, is now with us. They track the commodity pack pretty closely. If you could just start by telling the strength in the dollar, what is your current view, especially after the latest comments by Fed?
Yeah, I think the dollar is going to get much stronger over the next couple of years. It's bouncing right up against resistance right now at around the 98 level, which it's hit on several occasions and backed off. I think once it takes out 98, it's going to go to 100, 101, 102 area pretty quickly. Likely it's not going to go in a straight line. It's going to be volatile. There'll be times where it goes up and comes back, but I think in general, the Fed is kind of in a tough spot. They've kind of backed off on their rate hikes, but yet the market is back at its all-time highs. Inflation is low. Unemployment is very low. So, they're kind of in a box a little bit. They can't really drop rates, and they're having trouble raising rates right here. But rate hikes is only a small part of my dollar thesis of why it's going to get smaller. But I do think the dollar is going to get much stronger in the back half of this year.
What is the sense you're getting going forward on liquidity, and how will this impact the global markets, particularly emerging markets, given that they are the huge beneficiary of these fund flows?
Yeah, I think liquidity is going to go down, to be quite honest, especially for international markets. I think the dollars are going to come back home. I think they're going to come back to the United States for a number of reasons. I think that's going to drain liquidity from emerging markets. I think it's going to make it harder for them to service the debt that they've borrowed in dollars. I think that's going to put pressure on their domestic economies. And I think that will lead to fund flows, or it will lead to kind of this vicious cycle where, when the emerging markets start to break down, even then the United States dollar will get a bid from a safe haven bid. And it kind of creates this vicious circle where then that puts even more pressure on the emerging markets. So I think liquidity is probably going to fall. And I think that illiquidity will hurt international markets more than it hurts U.S. markets.
Tell us, do you see an impending currency crisis of sorts shaping up?
Oh, yeah, definitely. Unfortunately, I don't like it. But I think it's going to happen. I think it's kind of inevitable.
And what about the impact of crude prices?
Oh, that has a problem as well. Think about it this way. The U.S. used to import oil and export dollars. We no longer import oil and export dollars. Now we export oil and import dollars. So higher crude prices actually puts even more pressure on the dollar. So, I think there's a whole combination of things. I call it the perfect storm for dollar strength. There's so many different factors that are leading to the dollar getting stronger. And, it's taken longer to play out than I thought it would. But I think we're getting pretty close to the point where it's going to start to be very obvious to the whole world.
Currently markets are getting spooked by the trade war. What's your view on Trump comments and the likely fallout that you're seeing on this level?
Well, I don't know about a constructive end to all of it. And even if there isn't, even if they come to a trade deal, Trump will change his mind 2 or 3 weeks down the road and, ask for something else. So, I think, with a guy like Trump, you just never know. And I think that's kind of his strategy. He doesn't want you to know. He kind of wants everybody on their heels all the time. And I think he kind of manages by chaos. So I'm not surprised by this rhetoric surrounding the trade deal. I think there will still be some kind of a trade deal get done. I don't know if it'll be as big and grand as everybody thinks. And even if there is one that gets done, I think it'll be, there'll be times where Trump will come back and ask for more. And whatever we agree to, I'm not sure the Chinese will live up to it either. I think, both sides are kind of entrenched in their positions, and neither one can really afford to back down. So it's going to be interesting to see how it plays out.
And given the backdrop of all that is going on, what is your view on the U.S. equity markets?
We've entered a really interesting time right here. And so I would say this, over the next 2 years, I still think that U.S. equities are going to go higher. We've kind of gotten back up to the highs, and we're in a period where the summer sometimes can be a little bit interesting. We've got European elections. We've got this trade deal. We've got a number of different factors which could lead to the U.S. equities going sideways for 3 or 4 months or maybe even 6 months. But I do ultimately think that we will break out of the top side of this channel. And I think that we still have highs to see in U.S. equities. And I always want to make clear that I think this happens because things are bad, not because things are good. I'm not making an argument that U.S. equities go higher because we're in such great shape and we have this magnificent growth and valuations are good and all this stuff. I think it's mainly driven by capital flows. And I think when the rest of the world starts to break down and when our economy starts to slow, that affects everybody else, and then that affects everybody else to slow down. And then when we get that safe haven bid, I think capital flows will come back to the United States. And I think it's those capital flows that push U.S. asset prices higher, not some fantastic economic conditions.
Do you have any specific view on India or emerging markets?
Yeah, India, I think, is pretty interesting. They have great, and they've had for a long time a lot of great potential. I think there's still a problem with a lot of bureaucracy, for lack of a better word. They've still, got a number of problems they have to work through. And I think with the dollar getting stronger, that's maybe going to exacerbate some of those problems. And again, this isn't specific to India either. I think this is a problem for all emerging markets. And I want to stress this isn't me trying to be the ugly American and saying that the U.S. is great and the rest of the world is bad. I don't believe that at all. I think the U.S. has a lot of sins to pay for, and I think we will eventually do it. I just think there's a progression how it's going to take place. And I think, unfortunately, over the next couple of years, emerging markets is going to be a tough place to be. And I think India will probably be in that camp as well. It's a great, if you're an Indian investor, I think it's a great time to own dollars and gold.
Thanks, Brent, so much for taking out time for us, telling us what do you expect and with your views also on the emerging markets and fund flows.